Hello, chart watchers, and welcome to this Monday, January 29th Market Watchers live show with your hosts, Tom Boley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it's the start of another week, and so far, the Bears are actually trying to gain some control of the action today. You can see the Dow Jones right now is down about 92 points, the S&P 500 down 10, the NASDAQ down 23, and the Russell 2000 down a handful. 10-year Treasury yield is on the rise again, breaking above 2.70% for the first time in probably about 3 years or so. The healthcare group doing pretty well on a relative basis. Biotechs have been very strong, although they are flat today. Financials also leading, and of course that makes sense when we have a rising Treasury yield like we have this morning. Banks doing well, which is, again, what we would expect with rising Treasury yields. Home builders continue to be very weak, along with the renewable energy space. Those are two industry groups that were the two best performing groups in 2017, but they have been struggling here off of very overbought conditions in 2018. And finally, one group that you might not realize has been having a very strong January, but the drug retailers, one of the top 5 industry groups so far in 2018. We'll be taking a look at that group a little bit later. But first, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well, thank you. Happy Monday.
Happy Monday to you. Did you have a good weekend?
I had a great time. I actually went back into time on Friday night and went to a totally 80s concert. I won't talk about how familiar I was with those songs because that'll give away my age. But yeah, the headliner was Boy George, Adam Ant. Actually got to see one of my favorite bands, the Violent Femmes. It was a lot of fun. So I felt like Back to the Future. Take me back into time, my friend, because that's what happened. It was really fun. So
suffice it to say that you recognized a couple of the songs. We'll just go with that.
Right. Exactly. You know, my girls know all the words to all those songs. You know, when they got their first iPod, they didn't have music, so they got to have all of mine. And so
there you go.
It works pretty well.
Yes, it does. Well, we got a busy day on tap. Of course, we'll have John Hopkins in just a little bit for Earnings Spotlight. But Aaron, why don't you go through and let everybody know upcoming announcements and the agenda, and then we'll get this party started.
All right. Sounds like a plan. Well, we have Bill Shelby coming in tomorrow to do the Everything Stock Charts segment. And then we're having my dad, Carl Swinlin, come in on my birthday, January 31st, which is Wednesday. And Bruce Frazier will be here Thursday. So this is a packed week. And then I will be doing a workshop on sifting scans so that once you get all those scan results, how do you go through them and figure out which ones are the best potential candidates. So I'll be doing that on Friday. But today, what do we have on tap? It looks like a pretty packed agenda. And of course, it's Monday, so we will have our Monday setups. After technical news, we have Earnings Spotlight as well. John Hopkins will be joining us, 10 and 10 to 1. Our very first stock symbol is going to be BB, BlackBerry. And finally, we'll finish off the program with my DecisionPoint report. A lot of interesting information to share with you for sure on the DecisionPoint report. With that, I'm going to pass it back to you, Tom, and see what kind of technical news is going on. It is interesting to see the market finally moving lower.
Yeah, I mean, based on everything I'm looking at, it's probably a temporary pause. We've already seen it move back up off of the lows, but the 10-year Treasury yield, again, one of the stories of the day with the yield now above 2.70 at 2.71%. Haven't seen a reading up here in quite some time. Had a couple of economic reports out this morning. December personal income came in with a rise of 0.4%. The market was expecting just a tad less. And personal spending came in at also plus 0.4%. The market was expecting just a tad more. So they tend to offset each other there. But you can see the 10-year Treasury yield in response continues what it has been doing throughout January, just keeps going higher. And of course, that means money's moving out of the bond market. If money moves out of the bond market, chances are it's going to go somewhere. And we've been seeing a big melt up in some of the big areas of the market, big cap areas of the market, the Dow Jones, the S&P 500, and so forth, many of the NASDAQ 100 stocks, just a lot of money flowing in there. Let's take a look at a couple of the areas within the market. And first, we'll start off with the financials, the XLF. You can see that throughout this period where we've had the 10-year Treasury yield really moving higher, look at the XLF moving higher right along with it. So this is a group, an interest-sensitive group that tends to do well when rates are rising, at least certain areas of the financials, especially banks, life insurance companies, asset managers, investment services. All of those tend to do very well with a rising interest rate environment. So it's not shocking to see the banks doing as well as they are. Last week, I think it was, we talked about the full line insurance companies. This is the dollar DJUSIF. That's the ticker symbol. And here you can see the huge move that was made last week, giving back a little bit today. But hey, after the week that it had last week, I think we can maybe cut it a little bit of slack. If we look at a 3-year weekly chart, it did confirm on Friday a close that cleared the prior highs. So even though we're seeing a little bit of short-term weakness, it's probably setting up more opportunities than not. Biotechs, wanted to bring this one up because the biotechs have been absolutely on fire. So let's start first with the daily chart. See if I can get this one up here. There we go. Here was the big move on Friday. And you might look at it as just, okay, nothing big, just continuation of what we've been seeing prior. But I think it is rather substantial when we take a look at a longer term chart. And I'm going to drag this back even further. Let's go back throughout this bull market. And so we're going to go back the last 9 years. You can see biotechs had a huge move up 2012 to the middle of 2015. And since then, we have been consolidating here in a cup, a handle, and then that move on Friday actually cleared major price resistance. So I think biotechs are off to the races. I would be surprised if this measurement isn't eventually hit. And the measurement on this cup, 700 points to the downside, that's the measurement. You add it to the breakout point at 2,200, and that gives us a 2,900 target on the biotechs, and we are sitting at 2,268. So I think that is going to be very interesting. The home builders, we also mentioned this one, the fact that it had been struggling so much recently. We did have a negative divergence, higher prices, lower lower PPO. And we saw some weakness here over the past 5 or 6 trading sessions. That is continuing today. But as we talked about last week, this is a group that was absolutely going straight up to the stratosphere. And a normal test would be a 20-period test. We're not there yet. So while it looks really bad on the daily chart, I think when you step back, this is actually a very necessary part. You can see for the first time in 3 or 4 months, the home construction index actually has a weekly RSI below 70 now. Had not seen that. It was incredibly overbought. So this is a group that's pulled back. I think it could have a little bit more room to go, but the closer it gets to this rising 20-week moving average, I think the better the reward to risk is starting to look in the home construction space. Taking a look at a couple of other stocks or areas. Let's talk about Apple, because Apple comes up with earnings this week. Check out the move to the downside. It's got pretty good gap support and price support between 166 and 168, closer to maybe the 167.5 area. Today's low is 167.07, and we are reversing off the earlier lows. I think that Apple represents a pretty interesting trading candidate ahead of its earnings report, only because we're talking about another multinational company. They should be benefiting from the very weak dollar that we've seen and the strong foreign currencies against the U.S. dollar. A lot of their counterparts in technology have been reporting strong results. So the fact that we've seen a pullback now in Apple to test support tells us one of two things. Either Apple's underperforming or we're about to see a reversal and a move up into earnings. If I had to make a bet, I would bet on the latter. But Apple looking pretty good. Twitter bouncing. got up to resistance today, but notice on this pullback now, didn't hold the rising 20-day moving average, but also if you notice, we had a higher close here with a lower PPO reading. So we had a negative divergence. We went down, we hit the 50-day moving average. We tested both price and gap support, and then had a quick 2-day rally between Friday and this morning to test the upper end of the range. That was a really quick little rally from $22 up to about 25 and a half. So I think Twitter right now remains range bound. Let's take a look at some earnings. First, we have Lockheed Martin reporting today, LMT. They reported revenues that were $15.14 billion. The market was only expecting $14.75 billion. They came in with their earnings at $4.30. Market was expecting $4.06. So we had a nice beat top line. We had a nice beat bottom line. Beautiful move last week off the rising 20-day moving average. Gapped up earlier. So far, we got a little bit of a black candle on very heavy volume. But I think Lockheed Martin with that earnings report, price support sitting down about 336, and you've got the rising 20-day moving average at about 331. I think this area in the lower 330s represents pretty nice support if we see a pullback on LMT into that area. There's a utility that reported this morning, Dominion Energy, and you can see, like many of the utilities, Dominion Energy has been going down. They did beat bottom line, 91 cents versus 88. Their revenues came right in line, $3.21 billion. That's what the market was looking for, but they're just out of favor. This is a group that the market really doesn't want to look at with rising treasury yields. Makes the utility yields look not that attractive. So you get a lot of income investors that move away from utilities, move more towards the treasuries that are now beginning to yield higher rates. And so this is just a group that's out of favor. So unless they came up with some earnings that, really started to adjust valuation models, which they didn't do, it's just a group that's out of favor and really difficult to do much with. It is near price support. That's worth mentioning. We do have the PPO, which has turned higher from very oversold area. But until we can get back up above this declining 20-day moving average, I think this is a group, and particularly a stock, to stay away from. Seagate Technologies, STX, came in. They beat their top line, $2.91 billion. Market was only expecting 2.90, so a slight beat there. They also beat on the bottom line, $1.48 versus $1.40, and they guided their revenues higher. So they had the trifecta, but a lot of it was built in. And I see a big gap up back in early January. That may have been a pre-announcement. I'm not sure. But I think the market was anticipating a good report. It got a good report. It's down a little bit, but I still think the chart looks good, and certainly the report was strong. One stock that did struggle earlier today, this is Affiliated Managers, AMG. They missed on their revenues. They came up a little bit short on revenues, $604 million. Market was looking for $607.5 million, but they did beat bottom line, 468 versus 465, and we saw a little bit of a pullback. This is a stock that's been doing very well, been trending higher, but I like the fact that we've pulled back, held on so far to price support, also that rising 20-day moving average. I would expect to see AMG continue to move higher, although the fact that they did come up on short on revenues probably would take it out of the equation for me. I like to trade stocks that beat both top and bottom line. One company that is reporting tonight, PFG, Principal Financial Group, and this one has been in a pretty nice uptrend. I expect that we'll see some pretty decent results out of it, but much of it may already be priced in. Getting to a couple of upgrades and downgrades. First, we have MOMO. Momo was upgraded today, and kind of interesting because it was in a downtrend, and it's been acting much more bullishly with higher highs, higher lows going in. Gets upgraded today. Volume's already pretty strong. I'm going to pull up the longer-term weekly chart here. You can see after it's struggling below the 20-week moving average for 4 or 5 months, maybe 6 months, we have climbed back above that and appear to be moving back to the upside, although there was this one very heavy volume candle that began somewhere around current price. As you can see, we're getting back up close to this area. So I'd want to see it get through there. But so far, so good. I mean, this is a stock that was definitely beaten down for the last several months and has rallied to get back up above that 20-week moving average. And it doesn't hurt to get an upgrade. AGN, another one with an upgrade. And this is another stock that looks to be strengthening here on the daily chart, at least. moving back up above its 20-day moving average, and the 20 is crossed over the 50. So we have a nice golden cross. If it does hold up, it should continue to provide some support down at the 20-day moving average. So that's something to look for. Some of the stocks downgraded today, ABBV. This is AbbVie Inc. But after a huge move up with earnings, the downgrade, honestly, I wouldn't pay a whole lot of attention to it. It was probably a valuation type of a downgrade after the huge move up that we saw with earnings last week. So I think ABBV looks pretty interesting. FTI, this is another one that got a downgrade today, but I think the stock looks pretty good. Beautiful move up, great volume trends, and now we are coming down to test price support, a little bit of gap support, and the 20-day moving average. I think this represents pretty nice short-term trade on FTI. And then we had just a couple others. RRC. You can see this one was downgraded. Now, this is a completely different picture to me. This is a stock that's been downtrending for quite some time, getting another downgrade. And while it has recovered off the low, I would expect it to have some difficulties. There was a huge volume gap down Thursday of last week. I think getting back up anywhere near that 16 level is probably going to present some difficulties for RRC. And the last one is DEO, which is Diageo. Double top, pulling back. There was a negative divergence on the PPO. You can see that was lower as we tried to make a breakout. So the 50-day test, maybe a pushback toward the center line wouldn't be a huge surprise here for me on this one. I want to move over now to talk about one thing that really is driving the market you may or may not be familiar with. But in my blog this morning, I wrote about this, talking a little bit about the Russell 2000 and the fact, I mean, I've been very bullish. I continue to be very bullish. But if there was one thing that really has me not really on edge, I think I know why. But one problem I would say is that the Russell 2000 on a relative basis has been struggling against the S&P 500 now for the last 14 months. Here was a relative high that we saw back in December of 2016, and you can see we have been downtrending on the Russell 2000 relative to the S&P 500. And I really want to stress that, because if you look at the bottom of this chart, you can see the Russell 2000 has been going up. It's been setting all-time highs. So if you're just looking at it on the surface, you'd say there's nothing wrong. But if you look at it relative to the benchmark S&P 500, you'll see that it has been downtrending for a while. However, we are at very key relative support. And you can see the last two big lows on this relativity chart came in right at about where we're sitting now. So this would tell me that the odds are pretty decent that we're going to start to see a little bit of outperformance on the Russell 2000. And it comes at a time when small caps tend to perform pretty well. February through May, small caps tend to perform pretty well and better than the S&P 500. So it's going to be really interesting to see whether or not this relative support level holds, because if it does, it should change your trading strategies. If you've been trading a lot of bigger stocks, larger cap stocks, you might want to start considering some of the smaller caps that have not been keeping up with the S&P 500. And as I went down here into the sector industry watch, what I did is I showed the fact that since the Russell 2000 has been downtrending relative to the S&P 500, notice what the dollar's been doing. Here's the dollar index. It has been also downtrending during this same period. And when you think about what the dollar has, what the impact the dollar has on the stock market and the performance of various areas of the stock market, I think this is really interesting, because the dollar, when it moves lower, it actually is a positive for those large multinational companies that we find on the Dow and the S&P 500, the NASDAQ 100, all these large companies that do business around the world. The falling dollar, actually, if you have profits, if you're doing business in other parts of the world, in areas where the currency is a lot stronger, when you translate those profits back into the U.S. using a weaker dollar, it actually increases your profits. So the fact that the dollar has been dropping so much over the last 14 months leads to the outperformance of, I'm not going to say it's the only factor, because there's not a 100% positive correlation between the Russell 2000 S&P ratio and what's been going on with the dollar. The dollar can move up and down for a lot of different reasons. And it doesn't always have to be a falling dollar doesn't always have to be a negative for small caps. A rising dollar doesn't always have to be a positive for small caps, but it is one of the factors that you need to take into account. And the reason I mention all this, if I pull up a long-term dollar chart, I'm going to go back here and pull up the dollar, because while the small caps are testing a key relative support level, if we go back to a long monthly 15-year chart on, that was a USD, that's semiconductor, sorry. It's a dollar USD is the symbol I was looking for. But if you take a look at the 15-year chart here, what we're going to find is that we've got trend line support right where we are sitting currently, and we had a double top breakout on the dollar at this very same level. So negative divergence on the monthly PPO on the US dollar. We've come back down, we've reset the MACD, we've moved a little below the 50-month moving average, and now we're testing trend line and price support. At the same time, the Russell 2000 sitting a key relative level versus the S&P 500. If the dollar bounces from here, and we are bouncing today, if the dollar bounces from here, could be a great opportunity coming up the next few months for small caps. And with that, I'm going to switch it over to our Monday setups. And Aaron, I'm going to let you take it away. What do you got for today?
All right, let's get it started. First, we probably should look at what we did last week.
I know you beat me again. You're now up 3-1 in 2018, and
Really?
And you don't short-term trade.
No, I think that's why I'm doing all right.
Well, you got to put your money in it. You'd be making lots of money.
I know it's true, but it's a lot easier when it's a paper trade. They always seem more successful. I have picked up a few here and there, but right now I'm pretty much, my capital is tied up and it's where I want it to be. So not enough to start putting more back in. So we'll see. Maybe after taxes, I'll be okay. We'll see.
Well, you keep getting the results you've been getting, and you might talk yourself into it.
I know. I just might. I've been telling people too, and especially my husband, who is certainly encouraging me to do more. So we'll see. I'm going to probably grab his investment accounts soon. I'm surprised it's taken this long, but anyway, so with SCHN, I guess, let's see, the last right now is like 35.85. That still puts you up about 0.7%. So, it wasn't like you did terribly or anything.
I actually thought I was down from the point that we did it, because it was after 12 o'clock last week.
Well, I wrote down what you had, and we had you down for 35.60.
Oh,
so yeah, so that's right in there, probably at the bottom of this bar. So yeah, it's all right. You did all right.
One thing I was thinking about, I don't think, and maybe I'm wrong, maybe somebody who's watching has been following the picks could tell us, but I think since we've been doing this, I don't think we've had a week yet where we both were lower.
No, we have not. Yeah. But at the same time, as we all know, when you're in a really strong bull market, don't fool yourself into thinking you're brilliant because almost everything's going up. So that's my advice. I have to remind myself that, especially when I have pretty good picks like this. So I picked this up right around here at, let's see, 54.40 is what I had listed. So actually, I didn't even get that benefit. So I was probably more up here at the noon hour, it looks like. But that's what I had myself down for, was 54.40, with the latest close at 56.45, which is even bigger than I had earlier today. It was 55. Let's see, 55.60. It went to 56.24, and now it's at 56.45. So yeah, that puts me up quite a bit. Because I had it 56.24, I was up 3.5%. So,
well, I think it's also worth mentioning that during this week, first of all, you got an airline stock, and over the last week have been crushed. The airline index a week ago, let me see if I get this right, was at about 306 or 307. It's now at 281.
Yeah,
so you've got a stock in a group that actually went down about 6 or 7% over the last week. And you got a stock that's up 4%, which I think is pretty impressive.
Well, here's the thing. I mean, I know, we have very different trading styles, and your style is to go find a, strong earnings, strong group, that's typically what you go on your first. Correct me if I'm wrong, but for me, I go strictly by momentum and chart patterns. And so while it might be interesting information for me if a particular sector isn't doing well, but there's usually winners within them. And so I kind of trust my indicators. And yeah, I think I think I'm proving the DPPMO is a pretty solid indicator. So it's great to be able to demonstrate that. So I'm going to take you, let's see, I think I want to go over to my Safari. In fact, I do. All right, make this big. So I ran my scan, the typical one, and I just didn't get any good candidates at all, I didn't think. So honestly, this would probably be one of those days where if the candidates aren't there, I more than likely would just, throw my hands up in the air and just wait for a better entry, better results. No point in forcing it. I mean, I've got a couple days to make that determination if I need to. So anyway, that's so there's my pick from last Monday, and these are the 5 I'm looking at. And in all honesty, I have not picked one, so I will see as I go along which one I want to take. So first of all, I have AV Access, AVXS. And you can see the really nice breakout. I like the fact currently it closed above. Now we had a close above and it failed. So this one is a little bit risky, I think, because that breakout, you can even see in the thumbnail, the close. Currently, the last is below that previous one from the top there back earlier in January. And I've got a nice PMO buy signal though, and I think everything looks pretty good here. But we are looking at a over 3% move today. So probably aren't going to pick this. I'm not going to pick this because I think it needs a bit of a pullback, but I still think it's something for a watch list. And Chegg Incorporated, CHGG. Another nice breakout here. Had that close on Friday above that previous overhead resistance. And now we're setting up, we've moved higher, pulling it back a little bit from Friday's close. So I think this one looks pretty good and really nice setup, I think, on the PMO. When you're looking at PMO bottoms rising, I like to see that in conjunction with price. It's a nice bullish confirmation. So this one's on the radar. So far, I think I would pick this one, but we'll keep going. GW Pharmaceuticals, and I think this one's been on our radar for a while, Tom. I know it comes back and forth with that space doing quite well lately. Got a nice breakout, but you can see the pullback today has come back below that overhead resistance line. And while I like the setup of the PMO, everything looks pretty healthy here. I would say the other chart would be more interesting to me. Everybody always says, if a chart's interesting, what does that mean to you? Well, it's interesting. There's a lot of things going on, but not necessarily going to just come out and say, yes, buy. If it were that easy, I would, there's no point in giving you the high sign on some of these when we all know that there's certainly risk involved, but we want to find some really good candidates. So I think this one looks really good because we did get that breakout and we're now getting the pullback. And so I think that's a great way to line up here. The PMO's now got a PMO crossover buy signal, so I'm liking that. High scooter. So I think I'm gonna switch over to Tilly's now. So that's TLYS is the winner so far for my Monday setup pick, and Domtar Corp, which is UFS, and a really nice breakout here. V bottom, I like to see those. The PMO has been really flat, but it's also because we haven't seen any major acceleration on this move. It's just been a very nice move, rally, but it hasn't, the angle of ascent never really changed much. And this is a measure, the PMO also, measures acceleration. And we didn't see pretty much if you're driving on the freeway, you've put your your foot on the gas and now it's cruising. So you're not accelerating anymore, but you're cruising. So this one's been cruising toward the top. I like that breakout. Really nice. But I think I'm going to go with Tilly's because we're getting that pullback today. And I'm going to pull this chart right back up. So I think that's what I'm going to go with because we got the breakout and today we're getting the pullback. And I like seeing that. This is that area of gap support. You had the double bottom, it executed, and it hasn't quite fulfilled its target. So I think there's still some upside potential here. And I'd be looking at a target about 1650, probably set my stop right around, I'd say probably 1450, depending on, the volatility doesn't look too strong here. So I might even consider 1475 on a short-term trade. But I think for 1450 is pretty good. That's where the 20-day EMA is lined up. So that is my Monday setup. Tilly's, TLYS.
Awesome.
Kind of figures, it's a California type clothing store. So there you go.
I like the space for sure. What was interesting is when you were showing UFS Domtar, probably a lot of folks don't realize it, but over the last month, basically the start of 2018, the leading industry group is paper, and Domtar is a paper company.
Well, there you are. It's been a nice steady rise. Like I said, no acceleration, but hey, I'll cruise on that 20-day EMA anytime.
No doubt about it. All right, so you got Tilly's. I got to try and find something to end my 3-week losing streak. So let's see what we got.
Let's see what price I'm going to go in here. Let's get the close. I am listing last as 1524.
1524 it is. All right, let's take a look at what I got going on here. First up, I'm going to go through all my setups here pretty quickly. First up, COHR. This one's been taking a pretty big hit over the last couple of weeks, but it is part of the, I know it's a technology stock, and I think it's electrical equipment in that industry group, which has been doing pretty well. And this one hasn't, and it has been pulling back on heavier volume. But the thing I like is that it does, just to annotate it, it does have gap support right there. And also, if you look at that, that also was pretty good price resistance back previously as well. So you got gap support and price support coming in, and it's sitting almost right on it. So I think for me, I'd be looking at the potential for a move all the way back up. Short term, maybe that falling 20-day moving average, but longer term, a reversal. And I'd really like to see a reversing candle on it first, where we break down intraday, maybe come back up and close above that support area. That would trigger a potential entry for me. I am watching this one. I don't own it at this point. But that second one, this would be the other low before the gap up. I really wouldn't want to lose that level. So I'd keep this kind of as an area of support where close back below, say, 255 would be a stop, and a target up at 325 is what I would ultimately be looking for. Although, again, short term, quick move back up to test the 20-day would be interesting. I'm actually going to go with this one at the current price, 266.43. So COHR is going to be my pick. This was the one I put in my blog, and I keep messing up by not picking the ones I put in my blog. So I'm going to go
there with you are.
Last week I had, I think it was Alibaba, and the stock broke out of the inverse right shoulder, and that had a great week, and I didn't pick it. The week before that, I think it was another one that had already gapped up or something on Monday, and I passed on it. But anyway, I'm going to go ahead and go with COHR. I like the reward to risk on this one. I think it's back at a key support level. And I think the fact that we broke below this December low might be a little bit of a spring, especially if we get a reversal here. But we'll have to see on that. Let me just go through the other setups that I had, though.
All right. So COHR at 266.43.
Yep.
Okay. Just making sure I got that all good.
All right. PRAA. Let's pull this one up. And these first three you'll find in my blog from this week, the setups, but the others are not in there. So here's PRAA. I really like to move up here on the heavy volume. A little bit of flag action. It did continue moving higher, so I don't necessarily want to call that a flag. But after this move up, looks to me like a nice cup. a handle and a breakout on increasing volume on Friday. So I think this one looks kind of interesting, having just recently broken out. J.C. Penney. Tell you, this one is one I never thought I would say that I liked, but I do think that there's a neckline that comes across here at about 420. Left shoulder over here. Here's the head. I think this move back down to test the 20-day. Looks like a bottoming reverse right shoulder, and a move back up through 420 on heavy volume would be very bullish for J.C. Penney. BB, which is BlackBerry, beautiful move up earlier in January. I like this pullback coming back to test the rising 20-day. I think you've also got really good gap support at about 1275. So I think current price down to 1275 looks interesting. BKU, this is Bank United, also coming down to test its rising 20-day moving average, and it's in that financial space, which should continue to benefit from rising treasury yields. BRS, Bristow Group, another one that made a nice move, did put in a bearish engulfing candle right here at the top on heavy volume, but so far on these pullbacks, holding the rising 20-day moving average, and that's where it is now. JBHT, also coming down for the first time in a couple weeks to test that rising 20-day moving average with a PPO that looks really strong. So I would expect it to hold that rising 20-day. And my final one is Shoe Carnival, SCVL. Came down last week, a little bit of increasing volume, but for the most part, I think that this is a stock that has been struggling with a lot of the small caps because of the dollar issue that I mentioned earlier today. But I do think this is a stock that's in a very strong space, footwear, and it is close to some key support levels where it has turned in the past, not to mention price support from when we broke out above the 23 level. So 23 to 28 is the range that it's in. It's currently trading in the 23s. So I think this one's kind of interesting. So that is it for our Monday setups for this week. Again, Aaron is going with Tilly's. Try and dominate me for a fourth straight week.
We shall see.
And I'm going to go with Coherent, COHR. So those are our picks for this week.
All right. Yeah, COHR has been on your radar for quite a while.
Yeah, well, it's one of the strong stocks, earning stocks, I should say. So it's one that I've been watching for quite some time. I like to get these stocks when they hit major support levels, and price support in that gap support area, I think, provides some at least minimal risk relative to what could be pretty nice return, but we'll see.
Yeah, absolutely.
So with that, let's move on to the earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to set up high reward to low risk trades. This strategy resulted in a 2017 risk-adjusted return that outperformed the benchmark S&P 500 fivefold. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to both quarterly revenues and earnings, and they'll teach you how to spot great trading opportunities that focus on both strong fundamentals and strong technical charts. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins, how are you doing this fine Monday?
Good, Mr. Bowley. How about yourself?
I'm doing pretty good. I know you're a golf fan like me. Did you enjoy watching Tiger Woods this weekend?
Well, I'll tell you who enjoyed it. The network. Because I haven't watched a golf tournament. Now, they've been laying low. The new season's underway. But I would say if Tiger wasn't playing, I probably wouldn't be watching.
Oh, my gosh. I love watching it. I think the young guys are awesome.
They're awesome, but I'm saying he just adds an element. I mean, the funny thing is, yesterday, Jason Day is a great golfer. Really, he won the tournament.
Yep.
I was out for a while, so I didn't see who won, but it was over. The tournament was over. And so I went to ESPN, site just to see who won. And the headline was Tiger Woods shoots 3 under par. So what can I tell you? It's all lead up to the Masters, right?
Yeah.
But you don't have to ask you because you're a golfer, obviously. And I want to get on with the stocks here, but I don't remember. I wonder what the record is. I don't know if you know this, but I think it was the third round Tiger hit 2 fairways.
Yeah.
I don't know if anybody's ever played a professional round and never hit a fairway. He was close.
Well, if they didn't hit a fairway, they probably weren't playing over the weekend. They probably didn't make the cut. I mean, it was impressive watching him recover from a lot of shots. I mean, you could see he was very rusty, and he hit a lot of really offline shots, both off the tee
Oh my
and
gosh.
a lot of his irons and stuff. But I will tell you, his chipping and putting were spot on. And so it was exciting watching. But
Yeah.
there's so many. And by the way, thanks for ruining the whole Jason Day thing. I didn't know who won the tournament, but
I had to give you a spoiler alert. It's Monday, for gosh sakes.
I was prepping for the show, so I hadn't looked to see who won.
Oh God! Well, now you know.
It was a great playoff, though. I mean, they were going all the way up until dark last night and couldn't come up with a winner.
Damn, I could have bet you.
Yeah, you probably could have, but I would have picked Jason Day, so you'd have lost anyway.
All right.
But anyway, let's move on. What do you got for today?
Well, now it's candy store time. Like, this is it, right? Earnings galore. Really going to kick into high gear, this week. But we've had some stocks, Tom. I want to go over 4 specific stocks so we can see how companies are being rewarded that beat the top and bottom line. So I got 4 stocks to look at. The first one is RMD. And if you take a look at RMD, look at that powerful, massive gap up on just huge volume, right?
Yep.
Not going to chase it. Now we turn into patience, right? You're going to have to wait for this thing to pull back. It's the most, by the way, I have to say that I have not seen the stock this giddy in a very long time. And companies making these moves and they just keep going higher. I don't know what happened, but all of a sudden stochastics and RSI don't seem to matter. Maybe they will at some point, but when you start seeing stochastics 100, RSIs 91, 92, and the stocks continue to rise parabolic, it's something different we haven't seen in quite a while.
Well, it's one of two things. Either stocks are way overvalued or the market is pricing in a lot of economic strength ahead. And, being a technician, I tend to follow the latter. I try not to ask too many questions, too many why questions as a technical analyst, because a lot of times you can't come up with the answer. The market's telling you what's going to happen. So I think that, some of the announcements that have come out recently from JP Morgan, from Home Depot, from Starbucks, a lot of them, are with their earnings reports or with investment initiatives. In the case of JP Morgan, they're citing the Tax Reform Act and the fact that they're reinvesting. They're doing a lot of things, passing things on to shareholders or onto, their workers. And, who's to say where we are in 6 months or 8 months or whatever, but certainly the market likes what it sees ahead.
But anyways, taking a look at this stock, we'll go through these quickly. Going to wait minimally to see if it pulls back to the bottom of that, that gap, the way it gapped up there. Yeah. And with a tight stop, because, if it closes below that, look out below.
Yeah, I would be shocked if it went down to the bottom of the gap, but I think the top of the gap is certainly a possibility. Yeah. And I would be surprised that intraday high after earnings, that's where the selling kicked in after everyone was really excited. So I think as we move up there, that's going to be a key area to try to get through. And if we don't, I think this is one, I agree with you, could pull back maybe the top of that area about the same time as the 20-day moving average comes up from underneath.
All right, let's take a look at VAR. Right. You're going to see some very similar patterns here.
Yeah,
explosive gap up, massive volume. Now you got to be patient. People saying, "Gosh, I wish I was in that thing when it reported," but if it was the other way around, you wouldn't want to be in it. You just got to be patient. These are the ones when there's going to be time, there's going to be a pullback at some point. And when they do pull back, these are the stocks, these types of stocks are the ones that traders are going to gravitate to.
Yeah. And I think too, when you're looking at a gap up like this and you say, well, I wish I had been in, look at what happened back at the end of October when they and they opened down, $6 or $7 at that particular move, at that point in time. So these things go both ways. And yes, in a rising market, maybe we're getting, I haven't done any studies, maybe more gapping up than gapping down. I don't know. But the point is there's no way to manage your risk, or I guess with options, you can manage it somewhat, but even options can't completely eliminate the risk that you're taking in jumping in to some of these stocks right before an earnings report. But I agree, these gap ups, and I especially like this one because of the sideways action, the fact that this one wasn't going up for 5 months heading into earnings reports. And all of a sudden, with the huge volume, there's a lot of traders out there saying, hey, they blew the numbers out of the water and everybody wants to jump in. So on a pullback, this is another one where maybe at the top of gap support, I'd be interested.
Yeah. All right. Two more in this category. ABAX.
Whoa, big January.
I mean, unbelievable. You know, some of these stocks, by the way, have made, 30, 40% moves for January.
This one's 50.
This one's 50. But I'm saying the weak ones, like Amazon's only up 30% or something.
Oh, yeah. Very weak.
Yeah, but I'm saying anyways, you got to be patient on this one. Let this thing pull back. Can pull back nicely. You write it back up again, I think.
Mm-hmm.
And last one is Intel, INTC, good old Intel, old guard.
Big report. They had a big report, though.
Look at the old guard.
Yep. Sideways consolidation again for a few months. And I know, went through periods where everyone was doubting Intel, had a big move up after its earnings in October, you can see. But for the most part, except for this one day when we moved down below and closed below 43, and I don't know if you've listened to Bruce Fraser, he's going to be coming back on here again this week, but he follows the Wyckoff method. Okay. And one of the things he talks about are these springs where you see major support on the chart and you go down, you move just below it very quickly, and then all of a sudden you come back up and it's like a spring. And that's exactly what's happened here with Intel after that false breakdown. This stock's been moving up. I mean, it was 42 and change 2.5, 3 weeks ago, and now it's over 50. That's a big move for Intel.
Big move. So we'll be patient on this one. Then the last couple things here. This is now we're deep into earnings, and now a lot of the marquee companies. I'm talking about the big boys now, the big tech stocks. Thursday, this is the lineup Thursday. Okay. Amazon, Apple, Facebook, and Google, all reporting Thursday, and I think that's going to be a defining moment for the market. In other words, if all of these come out super strong, I could see the rally continuing. If for some reason, out of nowhere, I don't expect it, but if for some reason, people keep asking what's going to take to derail the rally. You know what it would take? I think if 3 of these companies missed, that could be your impetus. I'm not suggesting that's going to happen at all. But if you're looking for something, if you're kind of wondering, do I get involved here? Or the market's up so high, you might want to wait till Thursday and see exactly what happens, the reaction to these 4 stocks, because I think it could be something that determines the near-term move of the market.
Well, I think Amazon is going to blow their numbers right out of the water based on this chart. I mean, it
looks like it.
There has been constant movement to the upside. I mean, there's no reason for money to pour into a stock like this unless there have been analysts who have been going out there and they know that Amazon is on track to deliver a great quarter. Mm-hmm. And so I think that we're going to see a great quarter. Now, the question is, how is it priced in? Mm-hmm. And that's where, we might get an Amazon pullback, buy on the rumor, sell on the news, where maybe we'll see a test of that rising 20-day. And by the way, a test of that rising 20-day, that's 1304, and Amazon's at 1418. That could be a 100-point drop, and the stock would still be healthy technically from my point of view. So there's definitely some risk in this market right now. It's not that I think Amazon or any of the companies you mentioned, I mean, I could pull these up. Apple's kind of interesting because I think it's trying to rally off a support here that it's been looking at over the past few months. And so I actually think we might see Apple begin to run into earnings later this week, but we'll see. Or maybe we get one of those springs where we break down just barely and then Apple blows it out of the park and back up we go. I mean, who knows? Google, you mentioned. Let's pull this one up quickly. Google, again, another huge move here in January. There's no doubt in my mind Google's going to come out with great numbers. I'd be shocked if they didn't based on the way it's acting. And then Facebook was the other one. And Facebook, after a decline back in the middle part of January, has come back up to set some new all-time highs and it's trading up near its high as well. So I think we're going to get some big reports out of all these companies. The question is just whether or not it's already built in the market.
Yeah, that's my whole point. If for some reason there was a negative surprise, Tom, you and I have been doing this a long time, and I don't care what you say. When you start seeing stochastics near 100, RSIs over 90, at some point, don't know when it's going to be, But those are almost literally off the chart numbers. And you have to start look at one of the stock here. I mentioned this maybe the other day. It just keeps going. Look at Netflix, NFLX.
Mm-hmm. Oh yeah.
Look at that stock. They reported earnings. Okay, I don't think they beat the bottom line.
Yeah, I think they either missed or matched top bottom line. I don't think it was a huge beat for Netflix, but what they did beat was
subscribers.
And that's, if you think back to Amazon for many years, reporting losses each quarter, and markets like, how, why is this company worth so much? They can't even report a profit. Well, once they turned it around, that engine started going.
Mm-hmm.
You could see why they were valued the way they were, because, they're a profit machine now. And Netflix, I think, is the same type of thing. They're not only reporting decent results, but if their subscribership numbers keep going up, their bottom line is going to do nothing but keep going up.
But let me ask you a question. You take a look at this chart. You look at the stochastics RSI. Would you buy this long here?
No, I would not. But I just pulled up the Dow, and I hear you. But when I look at RSI and I look at stochastics, I think secondary indicators. Mm-hmm. If money was starting to rotate into more defensive areas, I would be a little concerned. I mean, here's the Dow. Look at, if I was to trade strictly based on RSI or stochastic, I don't have stochastic up here, but if I was looking at the RSI, I would never get in.
Mm-hmm.
I would be looking at this and saying, what's overbought? I'm going to wait. And it started really, except for just a little bit of sideways action here in November, the overbought conditions began back at the beginning of October. And look at what the market's done while it's been overbought.
Yeah.
I can't make my decision strictly based on what RSI and stochastic.
And so the market's basically saying they're liking the tax cut. They're liking the economic expansion potentially. They're liking the earnings.
Well, they're liking a lot of things. And you're seeing the 10-year treasury yield. All the treasury yields are breaking out, which means money's rotating away from treasuries. Mm-hmm. So it's money pouring into the market, and it's also money rotating away from treasuries into equities. And then throw on the fact that we've got a weaker dollar, which is just, making profits on these large multinational companies go up exponentially on top of everything else. And I think we're just seeing a melt up in the market right now.
All right, let me lay one last one on you, because this is, I know you had a pick, Aaron's got a pick, and I heard you're like, 4 weeks in a row she's whooped you, so I'm going to keep an eye on hers.
Three. Wait a minute, the only 3 so far. I'm not
about to be 4. Okay.
Thank you.
Let's go ahead and pull up our chart of the week at earningsbeats.com, which is KB Homes, KBH.
Okay.
It's kind of counterintuitive. Rates are going up, right?
Yep.
But look at that look at the earnings and that powerful move up to the upside, and coming back down. Look, it hasn't been below the 50-day in months. So to me, you want to get involved in a stock I think has a good reward to risk. It's this stock. It goes below the 50, a bailout. But if it holds here, it could easily, make a nice move back, maybe test those highs or get close to testing the highs. Mm-hmm. That's where you're going to get a reward to risk 4, 5, 6 times. I like a stock like this.
Yeah, I think KBH looks very interesting. I actually talked about this one last week. I thought maybe gap support here in the 20-day would hold it. But part of the problem is the home builders have run up so much. I was looking at just a little bit earlier. I don't know if you heard when I was going through the technical news earlier, but the home builders are extremely overbought on a weekly chart, and they haven't even had a 20-week test for months. And it was the second best industry group in 2017. So the group is entitled to have a little bit of a pullback. And I think that's what we've been seeing in the group, and certainly what we're seeing here with KB Homes. But I agree. I think I'm not giving up on the home construction group at all. Home builders, I think, are going to continue to do well in 2018. Mm-hmm. Not, the rates are probably going to go higher, but the economy is driving rates higher. And if the economy is going up, more people are getting more income in their pocket. They're going to be willing to spend, especially with interest rates still near historic lows. So I think the home construction will bounce back. And whether or not it's right now, that's a little bit of a question mark. But I agree with you. This is a much better looking stock today than it was 3 weeks ago.
Yeah. All right. Listen, on that note, I'll let you get back to your great show.
All right. Appreciate it. Thanks for stopping by, John. We look forward to talking to you next week. I tell you, we'll have a ton to talk about next week.
Oh, you bet. All right. Oh, I can't wait till Thursday. We'll see you.
All right. Have a good one. So there he goes, John Hopkins. You can see on your screen, earnings spotlight, some of the stocks that we just talked about. And with that, I know we're running just a couple minutes behind, but let's see if I can catch up, and we will get into the 10 and 10.
All right. Here's our RRG of all of the.
Oops, I just took the screen. I'm sorry.
Oh, that's quite all right.
Take it back.
Yes. Okay, I shall. If I can get my little thing to work here. Why is it? I apologize. This is new share. Well, I don't want that. I'm gonna have you do it because my screen's being weird and I don't want to.
Okay.
Yeah, sorry. I'll get to it.
All right. What's the first stock today?
Our first stock today is going to be BlackBerry BB.
All right. Well, I talked about this one earlier, so this will make it pretty easy. Two things. I like BlackBerry. I like it at the current level. But here is your gap support. You can see the heavy volume that came in on this gap up. We continued moving higher. So I think that 1275 area looks really strong. Target short term for me is just going to be a retest up near 1450. And one last thing that I like is the fact that we are testing the rising 20-day moving average. So on here, I would annotate like this. And boom. So I think BlackBerry, the reward to risk in the near term from a near term trade, I think is pretty strong here.
All right. Okay, I've got my RRG. Let me see if I can get it to work to share with you. I don't know. I'll have to work with my producer. I don't know why. There we go. You guys can see it. Okay. So I actually clicked off this one Canadian stock because it skews the entire RRG when I was including it. So in any case, I just wanted you to see, it's always interesting just to see where these fall. I always like to pick these ones in the blue though, because that means they're leading, they're improving, but it's not always the case. So anyway, our second one, I'll let you take it back, is going to be that NEPT.TO, because that was kind of an outlier when I was looking at that chart earlier.
All right, NEPT.TO. Mixed bag here. I do like the volume trends, which have been pretty bullish. If there's one concern, and I'd be really careful if we get a reversing candle of some sort, like a big down day, because off of the recent highs here, you can see that the PPO is really struggling. So it's just telling me that the price momentum is slowing. Now, I'm not looking at this overall as a stock necessarily that's lost its momentum, because on its last breakout, you can see volume was very strong. So I can't argue that this one has momentum issues when it's breaking out to new highs on heavy volume. However, from a price perspective, if we ignore the volume, it is slowing a little bit. And after a huge rally to the upside, of course, it's got to slow at some point. Can't keep going at this pace and the PPO continuing to rise forever. I mean, this is a stock that was at $1 3 months ago, and today's high was 441. So it can't continue to rise at that pace. So you're going to see the PPO or the MACD or the PMO or whatever you follow, it's going to roll over because you just simply can't keep up that pace. So what I really want to do is watch the volume. And so far, I think the volume here looks really good. So I'm still bullish, but it's an aggressive play because it's moved so much. Anybody jumping in here, you have to understand there's a lot of risk to the downside.
Okay, very good. Let's see. Our next one is going to be UAL. And I know we talked about airlines. It's certainly been a popular topic in the chat room earlier this morning for sure.
Yeah, I got to see some things change here on UAL. I mean, I just don't like that massive volume gap down below the rising 20-day moving average. So you had some pretty good gap support there. You had prior price resistance, which became support there. And you can see with very heavy volume, we went right through both of them to the downside. And also now you've got the 20-day moving average, which is rolled over and pointing lower. I'd need to get back through gap resistance and back above that 20-day moving average before I would even consider UAL at this point. So for me, it's an avoid for right now.
Okay. The next one, I very much like the symbol, is CAKE, C-A-K-E, for Cheesecake Factory.
All right. I'm not a huge sweets fan, but I do like this chart, though. So maybe I should be more into sweets. After a nice uptrend back in November, I think you can see that we have been sideways consolidating. Could go up here and just mark the tops there. And the breakout was here, but you can see recent lows have been here. So I'm looking at support in the 46, 47 area, and I'm looking at resistance closer to 51. So at this point, because we're up closer to 51, this is not the area from a reward to risk standpoint that I want to buy. But I would just be careful at this point. Either wait for a pullback, maybe to the price support area, or if you're looking at this as being the move to the upside, then we shouldn't close back below the rising 20. We should continue moving until we make the breakout above 51. So I just think we're consolidating after an uptrend. I think this is ultimately very bullish, and I think the next major move is going to be a breakout over 51 as opposed to a breakdown below 46. But you're probably going to have some patience to get there.
All right. The next one, also kind of an interesting symbol, is MuleSoft. And the symbol is Mule, M-U-L-E.
All right. I could probably come up with a lot of really good jokes on this one, but I'll refrain. Let's see here. Well, the big gap up on heavy volume has definitely set price resistance. Anytime you get that. And this is one of those examples, again, where you have this big move up, you gap up, you move up intraday, and then they're selling all day long. So while everybody was excited at the open, by the time the day ended, everybody was pretty depressed and continued to move lower for a while. Now we're making our way back up, and look at the tests, the successful tests of the rising 20-day moving average over the course of the past couple of months. You can see right here. Wrong color. I'll just stick with it. But you can see multiple moves down here close to or just below that 20-day moving average with recovery back above. So I think that the technical outlook right now is much improved, but we still have to negotiate the major price resistance just above 26.
Okay. Next one is Nike, NKE.
Yeah, Nike's in that footwear space. I've mentioned when I did my forecast, I'm really a big fan of Nike because I like the space, and Nike's the leader. And so I'm bullish. We do, I guess, technically you could look at this and say higher prices, lower PPO, negative divergence. But keep in mind, again, that we've probably got at least 6 weeks between these two highs, which I think is a little bit long in the tooth to be comparing these highs. Instead, I think we sideways consolidated, made another breakout on heavy volume. And now what I'm looking at is a PPO that is accelerating to the upside. So I would be looking for two things to the downside, either for price support there to hold or the rising 20-day moving average. And when you look at this, they are just about the same. So you've got that 20-day moving average and price support both coming, and gap support, by the way, all coming in at that same area near the 65 level. So I think Nike looks good here. I'm a fan.
All right. Let's see. Are you a fan of IMMR? And that is Immersion Corp Technology Software.
Well, huge move today. I'm guessing this is either, I'm guessing it's got to be either earnings or maybe an announcement they were acquired or something. I didn't see this one in my news feed, but you can see the volume today is just massive. The fact that it's trading all over the place tells me it's probably not an acquisition, that it's probably earnings related. But IMMR, a huge move. I'd have to see it settle down. I mean, obviously, I like the action today. How could you not like a 48% rise? Kind of hard to be bearish. But in the short term, let's see how we finish today first. If we finish with a black candle on this kind of volume, move back down closer to the low of the day, then I think we've probably seen a short-term top in the stock and might be able to get it a little bit lower, maybe back in the 9 somewhere. As far as annotating it and a price level, well, the big breakout you can see right here above the October high was down around 850 or so, and it's going to take a little while for the 20-day to catch up. So a stock like this, if I was looking for entry, I have to watch it for a little while. I don't want to chase a stock that's up 48%.
All right. Let's see. Wynn Resorts, WYNN, taking a huge hit today.
Yeah, I think that the CEO, Steve Wynn, was, I think there was some sexual assault, or maybe not sexual assault, but some kind of a allegation. I don't think that, well, I don't really know enough about it. I just know that there's news out there. So you probably should check that out before you jump in here. But I think that's part of the problem and what we saw back on Friday and again today. I do expect the stock to settle down, but where, I don't know, and I'd want to see it. I want to see a recovery at some point. So you can see the breakout from back in December and the pullback. I think this is probably the next key area of support, which is down around 160, and we're currently trading at 166. But Win was just over 200 a couple of days ago. So if you think this is being overblown, maybe look for a reversing candle or something. But this is the key short-term support that I would be looking at, down closer to 160.
Okay. The next one is Omnicom Group, OMC. Really nice reverse head and shoulders breakout.
All right, OMC. Yeah, I'd like to see more volume on it. Actually, I'm going to go to a weekly chart and just see if this was after a downtrend or, yeah, this is definitely after a downtrend. Yeah, this is looking like a bottoming reverse head and shoulder pattern. So I'm going to annotate this weekly chart. And where you draw the neckline, I mean, you could say that's the neckline, but if you use this neckline, then you would use the low down here if it was intraday. I tend to look maybe more for something from on a closing basis. So I think right in there is a much better level. I think it also kind of highlights the resistance from back in 2015, the support in 2016, and then the breakdown in 2017, and then the subsequent neckline that has formed at about that area. Notice the left shoulder and right shoulder are almost identical. I think this is a really nice pattern and a big breakout. I would not be surprised to see OMC continue to the upside. To the downside, I would watch that 20-week moving average. There's no reason why we should close back below that at this point, and that's down at 74.08.
Okay, and then our final one, AMD.
Yeah, I talked about AMD within the last couple weeks, I would say, and I'm a fan of AMD. I think that longer term, it went back and tested a key area below $10, and this is another one. I'm going to annotate the daily chart, but if you go back and look at the weekly chart, actually, no, I'm going to annotate the weekly chart. So I think the big picture here tells a lot more than that daily chart. But you can see the recent lows going back to early 2017. We've had multiple tests at about 9.5, and that's where we were just recently. And there is your weekly trading range between about 9.5 and 15. And we are making our move back up toward the upper end of that range. This all comes after an uptrend. So the daily chart can get really messy because it's a volatile stock. When a stock goes from 15 back into the nines, it's not going to look very good on a daily chart. But keeping it in perspective here on a long-term basis, we got a beautiful move up, sideways consolidation. I expect we're going to get a breakout above 15 before we get a breakdown below 9.5. So I think AMD is strengthening, and I actually am looking for a breakout probably sooner rather than later.
All right. And that completes the 10 and 10 to 1. Not too bad. I mean, 5 minutes after.
Yeah, started a little bit late. I ran over a little bit with Mr. Hopkins, but
when there's interesting charts to share, what are you going to do?
Exactly.
Okay. And with that, I'm going to go ahead and do our final market update and then get into the DecisionPoint report. Well, of course, I'll give you a chance to comment, Tom. Let me know what you're thinking after we take a peek at these.
Okay.
All right. Oh, my goodness. Hang in there, guys. I'm not sure why it's doing this. Oh, my goodness. Well, I'm not sure what's going on, Tom. I cannot share my screen for the life of me here.
Oh, let me take it, and then maybe you can.
Oh, there we go.
Oh, you got it.
Okay. Yeah, I don't know why. It just doesn't want to listen to me until I click it 10 times. So it's sort of like my husband. No, actually, he's pretty good.
Oh, that was bad.
I know how to throw a little humor in there. But anyway, the Dow, notice all the markets, it was a really rough morning. We came in this morning and this lunchtime, depending on what time zone you're in. But we came in and we were really watching the markets pull back quite a bit. But we're seeing a bit of a rebound right now. The NASDAQ is even making strides. It might get back into positive territory before the close today. And we can see Russell 2000. The small caps also had gotten hit hard, but they've erased about half of their losses right now. TSX is starting to consolidate at the intraday lows. Treasury yields are are up. We can see UUP gapped up, but is starting to pull back a little bit. Looks like some gap support, though, sitting right there at about 23.32. And commodities are lower, but also rebounding. USO is lower, and we're seeing a current reading at 13.12. GLD, gold, gap down, also trying to come back and erase some of the losses. We've got the VIX rising quite high, currently reading at 1276. And actually, I'm going to take a peek at that VIX chart during the Decision Point report. Declines are leading advances currently. I'm going to go to our market summary right here from the front page. And I'm going to take a look at the sector spiders, see if there's any changes in rotation currently. And there we go. As you can see, about half of them are down, half of them are up, and consumer discretionary and healthcare are leading by just a bit. And we can see utilities and energy are the laggards. Utilities still continue to get hit pretty hard, down over 1.2%. U.S. industries, paper, and Tom, you were talking about that. Look at this unbelievable change. We're almost up 13% for the paper industry group. And as far as laggards, gold is the laggard currently. Natural gas and REITs also on the bottom part of the list. We can see the international ETFs. Malaysia is leading, but all of our international ETFs, every single one of them are down. Malaysia down the least with a 2 cents change. You can see Brazil and China are the laggards. Brazil is down now over 2%, that ETF. And let's go quickly to our scooter movers. All right, so currently top 10, you're going to see very much the same, the usual suspects, as we say. Once you get up there to the 99 range, it takes a lot to get you back down and out of there. So currently we can see the leader is Eco Petrol, and that's current leader as far as scooters, large cap. But which ones are the big movers today? DPS, Dr. Pepper, huge gap up. I can't remember the percent change on this one, but it was like 50%. It was huge. We've also,
I think on that one too, Aaron. I think Keurig Green Mountain announced that they were going to be acquiring DPS.
I had a feeling there was some news there. We can see Las Vegas Sands is also a big mover currently with an intraday. It looks like it's sitting at 79.55. I'm going to take a quick peek at that chart because we did look at Wynn just a little while ago, which was having a difficult time. I guess there are allegations for Steve Wynn, and that's causing problems, which could be reflected in now seeing some of the competitors doing better. You can see a nice breakout to past overhead resistance. Looks like it's probably all-time highs for Las Vegas Sands. I'm going to go check the weekly chart just quickly, and you can see a very nice breakout here. We're seeing some highs we haven't seen since 2014. New all-time highs look like they're being logged at this point in time. With that, I'm going to pass it back to you, Tom. Actually, we see that we can get higher on Las Vegas Sands. So back in 2007, we were up quite a bit. So there's some potential here.
Mm-hmm. I just wanted to follow up on one point that I was making earlier, that I had made earlier. And that is on the dollar and the effect on the Russell 2000. So let me just bring up one more chart there before you get into your Decision Point report. But here is the, and I know this chart's probably going to show somewhat small, and I'll zoom in here in just a minute. But the top part of this chart here is the FXE, which is the euro. You can see that's been going higher for the last year. This pink line going down is the US dollar. And then we've got the Russell 2000 performance, and then the Russell 2000 relative to the S&P 500 performance. And so as I zero in, I just want you to focus on what's happened to the Russell 2000 when the dollar rises and the euro declines. So in other words, we're starting to see currency gains from the dollar versus the euro and the impact. So let me just zero in here. And here is the euro going down. This is the period where we saw some strength in the dollar. And this was the Russell 2000 moving higher. And this was the Russell 2000 moving higher relative to the S&P 500. Now, it did start to pull back a little bit toward the end of this as, we consolidated and kind of moved sideways there. But that has been part of the problem with the Russell 2000 as we've been going forward, because the euro's picked back up, the dollar has turned lower. The small caps, you look at the Russell 2000, you say, well, they're still going up. They are going up, but they're going up much, much slower than the S&P 500. This is the relative chart. So yes, the Russell 2000 keeps moving up, but on a relative basis, it's been moving down. So if the dollar, and again, earlier in the show, I'm not going to talk about it again here, but earlier in the show, the dollar was hitting what I consider to be a very significant support area. And that is down around 87, 86.5 to 87.5 on the dollar index, which is $USD. If that holds and we start to reverse, I think we could see the next big move being in the Russell 2000, and we could see a relative spike like we saw back in the September and October timeframe. So with that, I'm going to send it back to you, Aaron, and you can get on with your DecisionPoint report.
All right. And hopefully my screen will share properly. All right. Waiting.
That's strange.
It is really where we rarely have any issue with this. So this is so strange. I'm trying to figure out all the different things that might be causing it. Oh my goodness. All right. Like I said, it takes 10 times and then I get it. Just poke them. Okay. So I'm going to start with, actually, let me show you my summary here. So I'm going to go through pretty much the major indexes, and then I'm going to give you those all important indicator charts. And as I said, the VIX is telling us some interesting information right now. So I will be going over that: dollar, gold, oil, and bonds. So I'm going to actually start on the blogs page. And that is where you can find the DP Weekly Wrap. This Carl, who's going to be on the program Wednesday, can't wait. Carl Swenlin, he is the one who writes the DP Weekly Wrap, and he writes on Fridays. That's his day. You get the guru's information every Friday. So I highly recommend you go there. He talked about a lot of the same charts I'm going to show you. The important one I wanted to show you that he had, and I apologize that this might be a little bit blurry, but what we're all looking at here, and what is all important, I think, at this point, is this parabolic formation. Now, normally we all start to get very nervous, analysts, when you start seeing parabolics, because usually when they collapse, it's very painful and very difficult. However, we've got a PMO that is extraordinarily strong right now. And you can see, even if we do get a pullback, his thought, and I have to agree with him, is if we get a decisive breakdown, I would say, which is a 3% breakdown below this rising bottoms trend line, at that point, we would start looking for support here along this previous rising bottoms trend line, which would bring it down right about 2750 when you're looking at the S&P 500. This is on the SPY. So that I wanted to point out that particular one, because I thought that was an excellent chart. So let's go ahead and we're going to look at the Dow very quickly. Like I said, I'll run through these pretty quick for you. I had annotated last week, I think, that looks about right, a flag formation on the Dow. And the expectation, of course, is a breakout with a move the length of the flagpole. I think you could make a case for the flagpole starting all the way down here at 24,750. And, you add that up there and you're going to get, a move about 2,500 at least up to 26,000. So we were talking about Dow 30,000 this year. I'm still, we might hit it. I don't think we'll close above it on the year, but, it's looking pretty good here. It's just that parabolic. We really need to lower that angle of ascent. It's very hard for the market to maintain that kind of a steep angle of ascent. So we're looking to see, more than likely, we're going to get a breakdown there. This is the NASDAQ 100. And, I can tell my charts are not set up. There we go. I think that one, right there. Okay. All right. So what I'm looking at here, the NASDAQ 100, as I said, we've got that PMO buy signal in place. Now, I haven't annotated this chart in a while, but let's face it, there hasn't been much to annotate. It's been a straight up rally like we're seeing on all of the other indexes. The PMO is overbought. Usually index PMOs, and this is NASDAQ again, 100, generally we'll see oscillation between 2 and -2. Our reading currently is almost 2.5 on the NASDAQ 100. So we are looking at overbought readings for the NASDAQ 100. Looks like we might not get past the close yesterday. We might not have a positive close from Friday to today. We'll have to see if we can't do that. But honestly, looking at those 2-day charts for the market summary, I mean, it's, again, everything's pretty much stair-stepping up. This is what I had annotated. Honestly, you could annotate one more here, is these moments of overhead resistance holding and then breaking out. And then, we're looking at almost once a week. In this case, it was, that all of last week. And that's when we got the breakout on Friday. So really, it just seems like we're seeing pauses, rally. And at this point, I'm not overly worried about a big pullback. But I do think Carl had a great point that if we do, it'll be onto that rising bottoms trend line. And again, that'll put us right about 2750 for a pullback. All right, let me get into the indicator charts. I want to make sure I have time to cover them, especially this one. All right, I'm going to make this bigger even so we can see it really good. All right. Okay, this is the net. There we go. Okay. What I wanted to point out on this is I watch the VIX and I watch Brett. And I think I wrote an article last week on this, the VIX, on the NASDAQ 100. I went and looked at the VIX, the volatility index, I should say, for the NASDAQ 100 and for gold, and explained my thoughts about why I invert my VIX scale. And that is because I want my oversold readings on the bottom and my overbought readings on the top. Because that's how it is on all of my charts, and otherwise I might get confused. So that's why I invert it. And the reason I use it as oversold when you get very high readings is because typically after the Bollinger Bands get penetrated, you're going to see a move to the downside or some pause. And I'm sorry, some upside. See, this is why I have to make it oversold. You'll see some upside after that. And it's not, it doesn't always happen. But the idea is we're going to see when people start to get very bearish in the very short term, and you start seeing breadth readings that are climactic, that's when you should start looking for either reversals or initiations. And in this case, you can see Friday we did get these breadth readings that were, I would say, on the overbought side, that were climactic, and the new highs as well were very high. So I'm going to be really interested in seeing what happens with these breadth readings at the end of today, because it looks like we are getting that penetration of the bottom Bollinger Band. And I would expect when we get a VIX this high, we will see some sort of, I call it a rally pop. And I do that because I'm looking for it to happen in the next day or two. And yes, I know all of you intermediate term traders and even some of the short term ones are, well, what use is that? Well, I think it gives you an idea of market condition. And if you want to start looking for a buy, I'd certainly want to see that. I would want to know that I'm looking at a rally pop coming up, or I would want to know that I'm looking at a possible pullback, or pause, because that's a great place to get in. So at this point, we're looking at very bearish sentiment as far as the VIX is concerned. We're getting very high readings, and now we're getting that penetration of the bottom Bollinger Band. So I would say I'm looking for a continuation of the rally. We'll have to see if this holds up. I will reserve my judgment until I see where we get a close as far as the VIX, and if I end up below that Bollinger Band. Short-term indicators. So right now, just having looked at what we did, in the very, very short term, the next day or two, it looks bullish. So let's see what we're looking at short term. Excuse me. All right. So I'd been pointing out some negative divergences that I've noticed on my short-term, the Swedlund trading oscillators. And, when I see these tops, and you can see this is the top I was making note of back when I wrote the article for this particular annotation. And you can see that the tops here, while this one's slightly lower, I would look at this as flat. And the main thing is look at the difference between the volume tops and the breadth tops. And to me, that can be a problem. It tells me that there's not volume behind the rally that we're seeing as far as the Swedlund trading oscillator volume indicator is concerned. So at this point, I am not too worried because we're seeing these short-term indicators rising currently. They are, in terms of the STOB, overbought. But not particularly. We've seen much higher readings. So they're all rising. They're both rising. And then you can get a sneak peek at the intermediate term indicators. They're still rising, although we're seeing, again, some weakness as far as the volume version of the indicator. So short term is bullish. And this is just a warning that this might be that opportunity for that pause. And we'll just have to wait and see. I hate saying that, wait and see. But that's what we have to do. All right, intermediate term indicators currently rising above the signal lines. Like I said, we're seeing some sort of softness here with the ITVM, the volume momentum oscillator. And so that does give me pause again. Maybe this is that indication that we're going to get some sort of a pullback. I know we need a pullback. We do. And maybe this is giving us some insight that we might be getting ready to at least see some consolidation. But I don't like to see intermediate term indicators topping an overbought territory. However, these aren't particularly overbought when you start comparing readings we've seen in previous years. So I'm not so concerned about the overboughtness of these indicators, but I am a little concerned about the softness on the volume indicators in these two indicator sets. So I would still say on all fronts, we are bullish. And that is one of the reasons why I came into this week feeling bullish. And so we'll just have to see how that figures. I've got real quick, I know we have just a few more minutes, but I do want to show you the big four on dollar. Still really, dollar is struggling mightily. And I think really the weekly chart is where it's at here to give you an idea of the importance of this breakdown. But we have found some support here as far as UUP at about $23. And you can see that's pretty significant support. And we're getting a bit of a bounce off that. I think we're still going to move lower to test those lows. This PMO sell signal below the zero line, well below the zero line, is a problem. And I think we still need to work that down into more oversold territory. But I would want to see this start to at least decelerate on UUP. With gold, gosh, it's going so quickly here. We've hit overhead resistance, and the PMO is decelerating. This is what could be a problem too, is we are starting to see a pullback on the discounts. And when you start seeing premiums, that means people are bullish on the dollar. And Carl is going to go through premium and discounts. I'm not going to do that because obviously I'm short on time. But what it tells me is we are looking at this is a perfect spot for a pullback, and that's what I'd be expecting right now on gold, especially if the dollar does find that support level, UUP at $23. I think we could be looking at a little bit of difficulty for gold in the future. And as far as oil, the flag has executed. It is moving higher, and the expectation is pretty large here when you look at the size of that flagpole. So, the minimum upside target at the time I had calculated is around 1450, and I don't see any reason why it won't be able to reach that We're seeing a lot of talk about oil moving up to $80. So I would say I'm definitely bullish on USO, and TLT. I am still bearish. We're still waiting for confirmation that this is a double top. We need it to not only test the support, but break down below it. We're not seeing that just yet, but as you can see, the indicators all suggest that we will. And that's it for the DecisionPoint report. And as you can see, we have covered up, I've covered off, as Greg says, our daily, weekly, monthly charts. I told you about our indicators, all of which look bullish right now. And the big four, bullish, let's see, bearish dollar, bearish gold, oil and bond. Oil I'm bullish on, and bonds I am bearish on. And with that, let's discuss the weekly schedule, because we have to sign off here. And remember, tomorrow we do have Bill Shelby coming in with everything stock charts. My dad will be here on Wednesday, Carl Swenlin from DecisionPoint fame. And then you'll find on Thursday, Bruce Fraser's coming in for Wyckoff. And then on Friday, I am doing a workshop on sifting scans. So that pretty much finishes us up today, Tom. And I have to say, based on those indicators, I'm still bullish.
Well, I remain bullish as well. It's just hard to get anything but bullish, and certainly appreciate your DecisionPoint report and update. Everybody always appreciates that on Mondays. Want to thank all of you for being with us today. Please remember to complete the survey as you exit. We love to get your feedback, to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here on Tuesday. Happy trading.